this week's precious metals market update. All eyes are on the Federal Reserve Open Market Committee meeting that starts today on Tuesday as I film this. And of course, the big talk is whether finally they'll raise the rate 1/4%. We, for 58 months, have had zero interest rates. In the last 17 months, the Fed has said they would raise rates, but at the last moment changed their mind. But my opinion is this time it will go through, and the reason is you had two governors say in the previous month that if unemployment, under the way the government does it, which is not the right way, got down to 5%, and the jobs in November were over 210,000 jobs, then they would raise rates 1/4%, or 25 basis points if you want to call it that. So with that anticipation, I fully believe tomorrow, on Wednesday, we'll see a hike, and it could cause a knee-jerk reaction to the precious metals, one last down, because as we saw last week, leading up to this, we've seen the heaviest short positions, and even though these people are trying to capture a pip, as we call it in the market, just one little tiny move they're trying to catch to profit, and then they'll either have to cover their short positions or exit their trade. So what we expect to happen is down first and then right back up as demand increases from the falling price and the short covering and people coming out of short positions and maybe not going long, but at least going neutral and just being out. So follow it, but this could be the opportunity a lot of people have looked for to get that go down around 1,040 or just below it and get into a long-term bottom, just like we did back in 2000, and then it took off and had a huge move. And we do think that is in the cards, even though gold has been in a 3-year bear market, as we all know. But hopefully we're near the end of that. So the other thing I want to talk about is what's going on in the debt market. I started getting emails last week from people I respect showing me all these bond issues that were going under or having huge problems, especially energy. When you look at price of oil and natural gas, where it is, there's just no revenue to pay these bonds. And we saw one yesterday overnight come down 63% on an energy bond. So you're going to start seeing a lot of this as interest rates rise. It's also going to push mortgage cost up on real estate, which is going to be negative for the real estate market on the short term. So these ripples will go through and cause tens of billions of dollars in extra interest payments that will come out of the economy, putting recessionary or depressionary pressure on the economies worldwide. So the bonds are something we've got to look at. There's been two other announcements this week that have been a little scary. We've seen that 8 of the major banks have had their grades downgraded, and we also got an announcement that now 74% of all the traded companies in the world are out of the U.S. It used to be around 50% just short years ago, and now we see companies continue to move offshore, new companies being more competitive in the same type goods and services that are provided here. People, you just can't get excited about the American economy. There's just no way. And if you want to bet your money on the American stock market, if you're timing it, that's great. If you've got a great timer, yes, it's got gyrations. It's going to go up and down and all around, but it is poised for a huge drop. I've been doing this 40 years, and I'm not a stock expert, but I can certainly follow the indicators, and just be smart that you not have more in there than you feel comfortable, because it is, every indicator we look at shows the American stock market overpriced, and the bond market is a house of cards. You remember, when you issue bonds, you issue them because you need money, and your ability to repay them has to do with whatever business you're in And as I said, the energy business looks terrible when you look at the price of oil and natural gas, warm winter. So there's some real problems out there. But right now, outside of U.S. Bonds, you better examine what would make your bond go down, because the fixed income starting tomorrow is going to be in the news, and it's not going to be good news. So hopefully we'll get this knee-jerk reaction down. If they do raise rates, as I anticipate, the shorts will clear out. The investors have been trying to buy at the bottom, somewhere between 1,030 and 1,040. These numbers will come to reality. And as I said, we just continue to buy silver, and we have seen a pickup in inflation to 2%. And once again, it's much higher than that, but even the government is showing a little higher inflation numbers. All good for our gold and silver metals as we go into 2016, as we watch for wars and rumors of wars and refugees and potential problems with houses being raided, and like we saw in Paris last weekend, where enough weapons to cause several other events found in these houses of potential Muslim ISIS members that want to cause problems and kill people in the name of jihad. So we just continue to pray for our country, our leaders, and we wish each of you a very, very happy Christmas and New Year and holiday season as we go into 2016. With this week's Precious Metals Market Update, this is Tom Cloud signing out.